Hello everyone, my name is Mike Hamilton from Trade the Easy Way, and I'm just going to show you what I'm seeing in the markets. And we've been talking about the dollar out of this daily range for a while, and I said if this dollar picks up that could be divergent, in other words negative for the indices, and that is what's going on at the moment. So if this dollar breaks this high, we've got US federal budget deficit tomorrow. Must have Fed coming up soon. We've got the Fed meeting Wednesday next week, not expected to raise rates. So the outcome of that could be interesting. But all the time we're above this pink zone. This pink zone represents the 15th of May, the first day of the new Fed chair. So if we drop down to support 99 and hold and push through that resistance, that could be very negative for the markets. So what I'm seeing at the moment is coming off of this resistance, coming back later in the month to this 99 support, and if we hold and break, then getting back to some of these highs that we've seen earlier in the recent past. Who knows, maybe even a full-blown push up to that resistance, up to these highs up here in close to 25. All right, so be careful as we get into these markets. As we see, this is the weekly chart of gold, which I think is more relevant to where we are now. So sitting right on that 50-day average, and this 50% support from the 2025 move from 29.35. So if this holds, I think we're going to see 4,600 soon, and potentially 5,000 again. Who knows? And if this really breaks, then we're going to see 6.5 and even 7,000. Long, obviously, long term. I'm talking very long term. But short to medium term, if we hold here, we're going to see 4,600 and 5,000 again on the gold. So keep an eye on the miners. Let's look at the Nasdaq. So, Nasdaq's been on a huge run on this weekly chart. So that's a sell signal last week. New high, closed below. So any push into 30,000, and we're almost doing that right now. If that sells, that starts to see some weakness, then we're going to really start to drop back. I think there's been a lot of froth in the tech market, and so we could easily come all the way back to 25, 26 unless we hold here and push up. But I think there's been some significant profit taking, and markets are very wary. So we just reconnect on the daily chart, we just reconnected with the 50-day average. So if that holds, then we could start to push back up. But very volatile markets, divergent RSI on the daily. So drop from 31,000 to 28. And very volatile as we get closer to the Fed decision. Stocks, Diageo has pulled back but held. The Diageo ran into 1627, dropped back to 1470 area and holding. If we can get back above 15.5, then I think we're going to potentially go and find those highs again. EasyJet has been pushing off for this extension reversal. So we've just seen 490 today. Oil has come off. Let's look at oil. If you're interested in the airlines, always look at the oil for obvious reasons. So oil is seeing lower highs, lower lows. If we break down under 85, then we're going to come and start closing these gaps. There's a big gap down there at 68. So we're seeing lower highs, lower lows. If this picks up and closes back above 90, then we're going to go back to 100 plus. Who knows? Maybe even 113. This could potentially be a big bull flag. So we are testing the support on this flag at 80. Obviously the support's 85. If that holds, that's going higher. I'm underwater in this one. D wave pushed into 31. Has just tested lows of 2250. If this doesn't pick up soon, then I am going to get stopped out. And in CTEC, decent couple of weeks. Look at this chart on the left here, the weekly. 2 higher closes on the weekly. So this is looking good for a move potentially back to 250 plus. And let's look at... I'm underwater in this camel. Central Asian metals. Decent push into 160, and that failed. So if I take that away, we could so easily be coming down to 120, 125 at this stage. So I'm underwater, and who knows, might even get stopped out on that, on Central Asian metals. Keep an eye on BT. We've just come in contact with 190, and I think we'll see 190 again. I don't think we'll see 172, but it's possible. So we're holding on to this ambush support. This 190 is a major area. So keep a very close eye on that, because if we dip again and hold, then I'm going to jump in and get onto this one. Right, so that's the trend line support that we are forming. Let's see how that one goes. Polar has come off. We're coming into ex-divi date soon. Weekly sell signal up there. Tested £9, and here we are just above the 8. Looks lower. I think this is done for now. As you approach ex-divi date, it tends to drop anyway. So keep an eye on that one. Well worth buying at £7 if we see it again at £7. That's POLR, Polar. Keep an eye on this one, OLN in the US. Was up there at 31 recently, down here at 20, under 25. So now service, that's pulled right back, having tested 138. Lloyd's, sorry, back to UK stuff. I think Lloyd's is a buy at 95. We still look a little lower at this stage, so I would be patient on that one. I wouldn't jump in. Aviva, so we saw 616 today and dropped. I still think this is okay. It may just go a little lower first though, that's all. It may go under £6 before that, so right down to March 26 support. I tell you what, if it comes down to that 590, I'm definitely in on Aviva. So keep your powder dry on that one for the moment. That's it. So markets have been pulling back. be careful. A lot of volatility in times like this. Having said that, the Dow has just gone right down to 5,200 and pushed up into close to 51,000. So these dips are still getting bought. The RSI on this Dow is not overbought, unlike it was on the Nasdaq. Just be careful. Dips are buyable, but we are seeing an increase in volatility. Hope that helps.